Today's number is 46. That represents the percentage of bears in the latest sentiment surveys. But could this chart realistically hold the key to what Wall Street is going to do next? And have they already begun to rotate? Warren Buffett, Druckenmiller, and others are selling some stocks that might surprise you and buying others. In today's video, we'll demonstrate what's going on, why we need to pay attention to this type of thing, and of course, where the big sells have happened. Join us, guys, in the special weekend edition of Markets Around the World. And boy, oh boy, is this week going to be big. See you soon. Well, welcome back, everybody, to the special weekend edition of The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. As always, what's going on with Wall Street's flows, the macro, and of course, the dark pool transactions. We've started to see a little bit of heat up here from Wall Street, and it happens at a point where the wall of worry is incredibly strong. According to the latest sentiment results, we've seen 46.2% of respondents come in bearish, according to the AAAI members survey, and only 29 were bullish. Now, as you guys know, this usually happens when you've really seen a massive sell-off, and we use it as kind of like an idea potentially to be buying the dip. But this is now happening at an all-time high, and it's pretty rare to do this. In fact, since the 1980s, according to the chart report, it's only happened a handful of times. And while it is quite rare, it's interesting to see the dynamic here of why we've been able to see one of the fastest V-shaped recoveries of all time. Not only has AI kind of taken over in terms of earnings, but at the same time, people are seriously concerned about a couple of things. And you'll see that later on today's video when you look at the latest survey results of what people are focused on. Now, the good news for the bulls is how often has a market actually peaked and then sold off massively in August? Well, the answer is, while we may see sell-offs, we don't usually see the beginning of a bear market starting in this month. September, October, November, December, well, that changes things. And funnily enough, December is one of the worst months of the year when it comes to actually seeing the beginning of something pretty bad. That being said, August only one time. So first up, for anyone that's going super bearish in August, it doesn't generally happen. And there are many reasons why you may want to go bearish. Have a look at this one. According to the number one overvaluation across the board read, which is combining PE, forward PE, CAPE, all these different reads in the markets, and has been correct the last 3 times, actually 4 times when you think about it, because this was 2021. We're now at the same point once again, bubble territory. Now, a lot of you guys would agree we're probably in a bubble, and I would tend to say yes, AI or any type of new technology always begins with hype. We enter into the hardware phase. Usually we see a bunch of IPOs, which I've already said many, many times over the last couple of years. We're starting to see them now in 2025. And then we enter into a complete euphoria mode where things tend to go bad. Now, that doesn't mean that AI is not the future. In my opinion, it totally is. And the investments are going to be both in the metal space and also in the tech space. But the big thing here with AI in the future may actually be, can you get access to the best companies? It used to be that all of them were always listed on the markets, but nowadays a lot of them are skipping the Russell 2000 and they're actually going straight into the S&P or never becoming public. Well, let's talk about some public filings because, of course, we've seen Warren Buffett buying United Healthcare. He's also been purchasing a couple of other things, but another great investor, Stanley Druckenmiller, has made some pretty big moves. And I posted about this over on our X account if you're interested. But basically, we saw Tesla and Amazon being completely removed from Druckenmiller's portfolio. Now, you could argue that that has something to do with what he thinks tariffs are going to do, but have a listen to this. SE, NU, WBD, AVGO, BAC, Microsoft, and IWM were all new positions, according to the latest filing reports. So obviously, there's a little bit of bullishness still in the Druck, and he's kind of going with the idea that we're going to see potentially a rally of maybe even the small caps, because remember, IWM is the Russell 2000, and this is very interesting when you consider what's happened just recently. Will we get a lot of rate cuts on the horizon? That is, of course, what Russell 2000 will need. So let's have a look at the latest data from the macro side. Goldman Sachs have come out and warned that they believe there could be a drawdown possibility, which does make sense, of course, for periods such as this. We know August, September, October, I've been talking about for a while. Generally, we get volatility. So what that means is that markets can spike all over the place and we start to get larger daily moves. On top of that, we do generally get some form of pullback over these next 3 months, although it may be shallow. I'm starting to think that we're still going to get that weekly 20 moving average wherever it sits, and a few other things that we'll talk about later on in today's video. But according to this, the probability of drawdown has spiked in April, and it was increased again over the past month. So this effectively means that they're starting to say, well, maybe there's a bit of a problem here starting to arise from the market being too bullish too quickly. Now, I wouldn't read too much into that chart, but I certainly would look into this one. This one here is from Todd Sohn. Really like this one. And of course, what it shows us is what we already know and we've reported, which is that leverage is at an all-time high. Now, of course, just looking at long leverage is not the whole case scenario. So whenever you look at these big stats, it sounds scary, but you must look at, of course, relative to other reversals. Now, we're not quite where we were at the beginning of 2025 when we were at extremely leveraged numbers, a 12-to-1 ratio, but we are still back to a 10-to-1, which you'll note is quite rare. Now, when we're at these levels, anything can happen, and you've just got to keep in mind there's a lot of leverage and a lot of debt out there, so an unwind can go like this, and it could be caused by things like zero DTEs as well. Long speculated to be something that could cause a bit of a sell-off if done correctly. Now let's have a look at why we're climbing the wall of worry. Well, everyone's concern is inflation, and rightfully so. Inflation has absolutely rocked the economies around the world, and I've got to say, when I was in the US, of course I'm an Australian citizen, but when I was in the US last, boy oh boy, did you guys have bad inflation compared to us here in Aussie land. And I would say that, I don't think many Australians would know unless you've been over there how tough it is for many people. Now, at the same time, it's interesting to see tariffs and trade policy being so low in terms of people's worries in the world. And interestingly, this is probably going to end up over here. But at this stage, we see inflation as being the major concern. And therefore, if we go to why can we climb the wall of worry? Remember, if we have bad inflation results, potentially if the market goes up off those because the macro side is more of an excuse than it is the reality of what the markets are going to do, then it allows people to really, or at least allows Wall Street to really manipulate us as traders and investors. So let's take a look now at corporate business applications. Interestingly, they're on the rise again, as many people have probably found AI and said, you know what, I can start my own business. And that could be potentially true, but at the same time, I thought there was an interesting paradigm with previous history. And that, of course, is 2006, 2007. Many of you may not know, but it's pretty common near the end of a major cycle period for everybody to get super bullish on freedom and super bullish on the idea of opening up businesses. And this tends to go hand in hand with all of those new technologies and also with kind of the opulence of society. Now, in this case, it could just be a rhyme. Maybe it's not going to happen the same way, but certainly we are seeing businesses on the rise. And of course, you could look at this as saying, well, look at how great everybody is coming up with all these great ideas, innovation here, there. No doubt, but still, before usually innovation truly comes through, there's usually something in the middle of those. Let's now take a look at the options equity put call ratio. You guys know we use this, but we don't use it as an instantaneous read. We did get a little bit more on the call side again this week, which basically means people were going bullish, and that really backs up this period here. Retail options put call ratios still at very high levels. And what this basically is saying is that everyone's buying. And remember, since 2020, all of these periods have been quite unique. Some of those causing pits, which is pullbacks in time, or of course, pullbacks themselves after such periods. But is the market continuing to climb the wall of worry? Well, the answer is yes, because of course, what we have at the moment is July CPI. Well, it was not exactly what people expected. It was a little bit hotter, but the markets went up. Then PPI was completely random compared to what people expected. And what did the markets do? Well, they dipped and then they purchased back up. So clearly there's this little bit of buy the dip style FOMO that's coming through, and the market's conditioned everybody to expect to buy all of those massive tech stocks. And this is where things get really interesting coming into the next week, because are we seeing rotation? Have a look here, breadth, almost 2 back-to-back 80% days last week. We started to talk about rotation starting to come through, particularly in healthcare. If we have a look at the last 5 days, you guys can see here The last 5 days, we had healthcare looking quite good indeed, up 4.65%. And all of the new names were not what they used to be. Remember, on Friday alone, semiconductors were the worst performing stock sector of the majors in the market. And this shows you the potential start of a bit of a pit that could come in the markets. Remember, 40+% of the market is tech. So if everyone starts rotating into other sectors, that could cause the market to go sideways or even down a little bit. Not necessarily, though, to show significant weakness. So keep that in mind. Obviously, Warren Buffett has been purchasing United Healthcare. We picked this up and showed you guys all the reasons. 61.8 fib, supply demand, all of those types of things there. But we've also seen a rise in VIX options or VIX trades coming through. We've seen a rise in other healthcare stocks such as LLY, which we reported on last week. A massive trade coming in for the 2x levered PLTR position, which obviously could show that maybe somebody has said, you know what, that's damn good profit. And this all happens at the period of time that we expect volatility. August, September, October, just expect it. Doesn't mean it has to be super bearish, but it does come through. Now, for the long-term bulls, you guys should still be pretty happy with yourselves. We did bring this up in August. It helped us, April. It helped us to, of course, be more bullish on markets. The triple threat when it comes to breadth thrust, the Zwag, and of course the 770 and the Whaley, they all happened. And when they do, that tends to mean that you should be generally bullish over the next 12-month period. Why? Well, that's what's tended to happen. And you can see here all those days later since we got this one, April 24th, what's the market done? It's been pretty bullish. So it's been the third fastest V-shaped recovery of all time. And this has taken us up into those euphoria meter style readings. Now, again, this doesn't mean the end of the market, but when we get up here, oftentimes we do get a bit of a pullback or pit in the markets. We haven't seen the reasons for that yet. We are looking for them. But of course, the markets do still remain resilient technically after that. Let's have a look at Bitcoin. Will Bitcoin and crypto be resilient? Well, if it follows similar paths to the past, we should be able to be kind of strong into the end of the year with, of course, the real potential here of pullbacks happening around a couple of different periods. You may notice that around this period, because remember we're about here right now, is where you sometimes do see a little bit of a weakness in the crypto, but it tends to come back strong. And this is just Bitcoin. Remember, the back end of these runs tends to be Altseason. Do you guys think Altseason is here? Let us know in the comments down below. These are the big earnings this week. We've got Walmart coming out. We've got Zoom. We've got Target. We've got all these others. And of course, that's leading into further volatility. But realistically, the biggest earnings, they're out of the way. And now it just moves to NVIDIA. No one cares about anything else. And it's just going to be price action based. So certainly a very good time to be a price action based trader more than anything else. Let's now move over to the S&P 500. Not much to report on the weekly dailies here. You can see the volume is pretty consistent. Market's still in an upward trend. No reason to say it's gone down yet. And no 6,200 plus fall off. So, of course, we do not have a new lower low. We do have kind of like a trend line that we're hitting at the moment and kind of touching there. But in general, the markets have remained quite resilient. Now, if you put on any indicator, you're going to see divergence on most indicators. So before you say, but Tom, there's divergence, I know there always will be in this type of market. And that could cause us to sell a little bit. But you'll see the NASDAQ actually looks worse than the S&P. And that's because I think we are starting to get some rotation. S&P 500 options, what have we got? 6450, 6500. We know they're the core walls. You get through 65, you're probably going to 66. And of course, NVIDIA has also hit that 180, 185 core wall. So it's struggling around this area, but still bullish. And Tesla, 350, 380 continue to remain the major core walls. So for now, Tesla's getting a little bit of a bad rap in the markets with a lot of people selling out of it. But at the same time, it did break that series of lower highs from last week. Now let's take a look at the leading indicators. First up, put call ratio. Starting to get more in the call favor. So that basically means that people are getting a little bit too bullish on options calls. That can bring in, puts, that can bring in volatility, but no signs of that just yet. The big sign really here is probably in rotation. You can see here, healthcare started to pick up big time last week. We already talked about that. I spoke about it in our private rooms as well. And the main thing as well is that we started to see XLV improve against the S&P. So defensive started to pick up. which is weird because they haven't done that for a while, have they? Look at this. Defensive's been horrible since April. Horrible. The worst. So when this starts to happen and you break downward trend lines, bake the daily 20, those types of things, certainly worthwhile paying attention to. And another one we'll be doing is equal weight versus SPY to see whether we get more rotation coming in. Because remember, if we rotate, the markets theoretically would probably pull back because big tech is the biggest concentration in these ones. Semiconductors versus SPY, you guys can see here the rotation. You can also see the divergence, but at the same time, no break under 0.44, so we're all good in terms of generally being bullish. And this is the big chart that I'm watching right now in terms of leads. Are we going to lose the big ones? So you can see here we're back to the bottom of the existing trend line. This thing's been an absolute beast. If this drops, well, again, probably tells us rotation, pullbacks, all those types of things on their side. Not many people probably were using this chart, so certainly it's a little bit of alpha there to show you guys a way of looking at markets differently than others do. And really ratios are, I believe, a huge part of where everyone's going to have to be at in the future. Let's now take a look at the US dollar. No break above 98.88, so realistically a bit more neutral at this stage. Gold, no break above 34.50 until that happens. We're in a pullback in time. Still bullish overall though. And silver, a little bit better than gold. Like to see this continuing up over the next week. Oil, very boring, guys. Oil is just so neutral and a bit bearish, I guess. It doesn't look that good. Break above 64.50, 60 might be worth paying attention to. We'll follow that if it does happen. And Tesla, we see a break below or above the lower highs. A little bit of a pullback since then. Technically, the options sitting at 350 and 380. So, look, a bit of bad rap in the news. The question really is will we find a bid again? And I think we'll find out probably Monday, Tuesday on this one. Chinese markets still got liquidity pumping into them, so still theoretically bullish. New high was formed over the last week. And as we mentioned, we were bullish off the daily 50. So I'd like to see that find some buyers again. And the Russell, well, it's interesting because you could argue it's hit supply and then it's going to sell. But for now, the Russell is still in an upward trend. So it just depends whether the IWM SPY combo, which is what I'm looking at really closely, goes above 0.36. I think that's going to be when you actually activate proper rotation. But at this point, that hasn't happened. NASDAQ, you can see here, yeah, it's not much going on. A little bit worse than the S&P, so clearly telling us that tech is at the forefront of a little bit of selling. So you can go tech versus SPY, and you'll see kind of what I mean. A little bit weaker, yeah? The first time it's dropped that daily 20, which I think is really the first sign of weakness we've really had since the rally back in April. So it's pretty wild what that's done. And then, of course, Ethereum dropping back down, may find support about 4,200. I think that'd be a pretty interesting level for it. And Bitcoin coming back to around the most traded area. So this is around the most traded zone. So realistically, hopefully it finds a bid here. We did get a new high. Theoretically, Bitcoin should still be bullish into the end of the year. So it's still daily up, weekly up, monthly up. There's no reason to say it's bearish just yet. In terms of this week, FOMC meeting minutes on Wednesday, guys, at 2 p.m. New York time. And then as we scroll down here, you'll notice that we get PMI on Thursday. So, Jackson Hole as well kicking off this week. Now, you guys know that Jackson Hole, the thing with this is this can bring vol. And I will have a special report on it because we've seen volatility around these Jackson Hole symposiums. Sometimes they've actually begun something a bit bigger. So being the year it is, being all the crazy stuff we've already seen this year, make sure to subscribe to the channel and also make sure to always come from that abundance mindset, guys. You had a fantastic day and I hope you have a great weekend with your family and friends. And as always, if you want to follow us on some of the other socials, I've been posting a lot on LinkedIn under Thomas Atkinson if you're interested in following me there. And of course, we always post over on X and here on YouTube. Thanks so much, guys. You have a great weekend. Bye for now.